Good morning and good afternoon, everybody. Again, welcome to another edition of the Washington Policy Pulse. I'm Nathan Dean. I'm actually not coming to you from the Washington, D.C. office, coming to you from the Northern Virginia Bureau of Bloomberg. But anyway, we actually have somewhat of a quiet week this week. Again, it's just me talking this week. Fairly quiet week. Obviously, here in the States, we had the President's Day holiday yesterday, so we only have 4 days for Washington to do things this week. So first I want to do is just have a recap of a couple things that happened last week. So Jerome Powell testified to the Senate Banking and the House Financial Services Committees last week. There wasn't a ton of great information here, but a couple of nuggets, and one of them about the enhanced supplementary leverage ratio. So if you're in the financial services space, this is important to you. If you're not in the banking space, you can just come back in about 30 seconds. But what Powell said is that he would like to do two things to the ESLR, or two things to the SLR. First, he wants to explore the idea of excluding treasuries and centrally cleared deposits held at the Federal Reserve from the SLR. This happened during COVID relief. It actually saved the banks around $2 billion in capital. So it's certainly something that I think that we could see come back. But at the same time, Jerome Powell also said that he wanted to move forward with a proposal from 2016 on the enhanced supplementary leverage ratio. Now you have two issues. You have the ESLR and the SLR. These are two small issues. Now, where I'm going with this is like when Jerome Powell says anything like, hey, he wants to complete the Basel III endgame, or he wants to do this or wants to do that, it's also up to the next comptroller of the currency, and it's also next up to the next chairman of the Financial Deposit Insurance Corporation, the FDIC. So Jerome Powell can say this as much as he wants, but it really is going to take three minds to decide what the next step here. So I am waiting to see what the OCC and the FDIC want to do in terms of the ESLR and the SLR. But, look, if the other agencies come in and they say, look, we want to exclude treasuries from the SLR, I certainly think they can get a proposal out by the end of the year, but that relief probably won't be until 2026. The other thing that just to keep in mind over at the Fed, Michael Barr is going to step down as Fed Vice Chair for Supervision by February 28th. It's not likely that he's going to get a replacement in there, or President Trump's going to nominate and replace somebody and have the Senate confirm that individual. So we're going to be without a Fed Vice Chair for Supervision for the foreseeable future. As of right now, I think a lot of people anticipate Michelle Bowman, who is the governor. She was a state banking regulator. She would be the next one up because Michael Barr is not leaving the board. So you have to pick within the board to find that next Fed vice chair. I think more likely what's going to happen, though, is that President Trump is just going to sit around and they're going to operate without a Fed vice chair for a while. This is sort of what happened when Dan Tarullo was there. He sort of was like the de facto vice chair without actually sitting in that position. So I wouldn't be surprised if the President Trump were actually just to say, we're not going to touch the Fed vice chair for supervision. So next up on our list, let's talk a little bit about the reconciliation efforts that are going on. Last week, we saw the House Budget Committee pass its resolution instructions. We saw this actually move forward despite some of the hiccups over some of the ideas. Again, we're not at the point yet where I'm really paying attention to this all that much, because this week, the Senate Budget Committee is going to try and produce their reconciliation instructions. Remember, this goes back to the one bill versus two bill plan. Now, I don't really care which way they do it, one bill or two bill. What's important for markets is the tax discussion, the debt ceiling discussion, and we really don't need to start paying attention to that probably for another couple of months. So whether or not they do the Senate plan or the House plan, they're still going to try and figure that out. But for those of us in the market space, we still have a little bit more time before we have to start really paying attention to that. Now, one provision that came up in the House plan that is sort of interesting, and if you haven't talked to Andrew Silverman about this, you certainly should, is the carried interest loophole. If you're in the private equity space, this is something that's very important to you, offers you a decreased tax rate over carried interest than if you were to be taxed at ordinary gains. President Trump has called for the carried interest provision to be dealt away with. It doesn't add all that much to the budget. It's around $13 billion in total. So it's not really all that much in terms of cost savings, but President Trump has wanted to get away with it. And certainly it seems that the House Republicans are on board with this idea as well. What we're looking for to see if there's anybody who's going to try and stop this is that it's Senator Thune and Senator Crapo. They have been very much, defenders of the carried interest loophole over the last, provision. over the last few years, and we have to see how much they're going to fight to try and keep this back. So if you're in the private equity space and you're interested in carried interest, definitely talk to Andrew or check in with us. We can give you a little bit more information on that. Couple Senate confirmations to keep in mind this week: Kash Patel at the FBI, Howard Lutnick at Secretary of Commerce, and Kelly Loeffler, the Small Business Administration. Senator Loeffler was the senator from Georgia. All three of those should get through fairly quickly or fairly speedily, so I don't think you're going to see any hiccups on that. The House is on recess this week, so obviously not that much happening from the House side. But a couple of other nuggets just wanted to call out. It's going to be a short call today, I think. We've seen our first Congressional Review Act resolution submitted, and this came from the Senate Banking and the House Financial Services Committee over the CFPB's overdraft rule. Now, Elliot Stein and I put out some stuff on the terminal this morning about this, but this is that rule that would limit how much banks can charge in terms of overdraft fees. The average overdraft fee was around $30. This takes it down to $5 to $7. Where we're going with this is the CFPB put this regulation out in December, and because it takes only a majority vote in the House and a majority vote in the Senate, you can avoid the filibuster to disprove a regulation. It's called the Congressional Review Act, and they have 60 legislative, not calendar, but legislative days from the date of that regulation to decide to overturn it. And so if the CRA moves forward, and if the House votes via majority and the Senate votes via majority, which I think in this case they can certainly do that, and so they just need to find the time to actually put it on the calendar, but it's very likely that this is going to be overturned via the CRA, a future CFPB would be prevented from going back to actually redo the rule unless it's materially changed. So, this is another way, in addition to the courts, rather than going through the rulemaking process, if they finalized it within the last 60 legislative days, Congress can overturn this. And I think sometime in the next, say, month, probably in March, mid to late March, you're going to see the House and the Senate vote to overturn that CFPB rulemaking, which is, brings a lot back, takes away some of that overdraft limits from the banking industry. And for what it's worth, a lot of the banks in advance of this rulemaking had already lowered their overdraft amounts anyway. So it's not all that big of a deal. It's not something that I would get all that excited about as a bank investor. Geopolitical news are actually dominating the week this week. I've just actually had a couple of radio hits pushed off because of what's happening in Saudi Arabia between Ukraine, Russia, and the United States in terms of negotiating. That's just, if you have geopolitical questions, just call in on this, and I'll certainly put you in touch with our friends over at Bloomberg Economics. I don't know why I pointed back that way. They sit behind me when I'm in the office, but our friends over at Bloomberg Economics, they're actually putting out a lot of pieces on the terminal right now on where we see these negotiations taking place. So if you need additional geopolitical assistance, go ahead and give us a call. The last two things I want to talk about is a bill that came from Senator Sanders and Senator Hawley. So you have a very liberal independent from Vermont and very conservative from Missouri, and they put out a bill that would cap credit card interest rates at 10%. Now, if you remember, President Trump said that he wanted to do this in his campaign. The current credit card interest rate is just north of 20%. So you're going from 20% down to 10% under this cap. Amongst the banking industry, you're looking at around $126 billion in terms of interest rate fees that are being collected. But A, I don't think this bill is going to go anywhere. And B, if it does, it actually directs the CFPB to amend Reg Z, which if the CFPB has been 95% gutted, which that has been staved off for now. So again, it leads to a lot of questions of what does this post-Doge regulatory landscape look like? Because if you are going to get rid of 95% of the workers, but the regulations remains on the books, then how do you actually amend those regulations? And certainly you could just have a bunch of lawyers over at the agency doing it. But again, it sort of leads to that question of how does this actually move and go forward? But for what it is worth right now, I don't think this bill is going to pass. But there is heavy scrutiny on this credit card industry, both the banks and Visa and MasterCard. If you attended some of my calls last year, you may have heard me talk about the Credit Card Competition Act, which is from Senator Durbin, that would actually increase the amount of networks that a bank must offer. And it can't be Visa and MasterCard. It would have to be Visa and Discover or MasterCard and American Express or something else. There's a real headline risk here for this industry. I think it's brewing. I don't think it's going to happen right away, but certainly I don't think this bill is going to pass. But it wouldn't be surprised if you saw some headline risk for this industry over the next 6 to 9 months. So I certainly want to keep an eye on that. And the last thing I want to talk about, and just feel free to put questions in if you want to have questions, is March 14th, we have a government shutdown. And I've been getting some client questions on this, and I'm going to have a better update for you next week. But without giving away what I'm going to talk about next week, been getting some questions on, are we going to see a government shutdown March 14th? And as of right now, my answer is I don't think you are. Because even though the Democrats are actually somewhat, the Democrats are very, anxious and angry about what's happening with Doge and impoundment and so forth like that, I still don't feel that they're on a strategy yet where they can effectively say that we know what the strategy is going to be in terms of shutting the government down. Because parties usually try to have a strategy, and when they move forward to these funding fights, and if you don't have a strategy, then you sort of shut the government down and you pay that political price. I'm just not sure of that, but I do think we're going to see some statements from Democratic lawmakers. Senator Schumer was actually hinting about this last week. They're going to be looking at this week. So I'm going to have my update next week out on the government shutdown. So stay tuned. I do think that we are going to have a significant government shutdown sometime in the next 12 to 18 months, maybe 9 months, significant being a multi-week shutdown. But right now, parties have to sort of feel like they're actually, on the same position, and they're doing something that's going to bode well for them politically. And I just don't think we're there yet. I'll also just please remember that when it comes to government shutdowns, we actually struggle to come up with impacts. Even contractors, their contracts are usually 12, 18, 24 months. So even the contractors aren't really all that impacted in the markets. For what it's worth, really don't care about government shutdowns. So I'm going to pause there for about 10 seconds to see if anybody has any other questions. But otherwise, I'm going to say thank you very much for attending. I really do appreciate it. I know it was a quick call today, but it's a Tuesday. It's going to be a short week, and we will have more for you next week. Again, thank you very much.